Hey there traders, thanks for joining me for this free video. We're going to take a look at the major averages and some key levels and just kind of discuss how the market's been behaving. We know that's going to influence how individual stocks move. So last week we saw each of the averages able to paint new 52-week and in some cases all-time highs on their daily charts. But the pace of the advance has certainly slowed, and that's pretty understandable when you consider just how far these moves have taken the market. So just for example, coming off this June 24th low to Thursday's high for the Nasdaq, that was a 10% run. And you can see that during the course of that move, we saw exactly 2 declines. And they were pretty incremental at that. This one right here on July 2nd was minus 1 point. And then this one right here on July 16th was less than 9 points. So we've seen a one-way market, and it's become a little bit of thin air up here. We've seen some very narrow range days here. And then on Friday of last week, we saw the Nasdaq suffer a little bit of a pullback, thanks in part to big name tech stocks like Microsoft and Google, which had reported earnings and did not see a positive response to those. Those kind of weighed on this index. Apple also pulled back. So we saw some of the heavyweights really just kind of having a little bit of an impact here on this index. Now, where do we go from here? Well, you know, I'm very cautious at declaring the end of a run. However, the run has been very significant here, and we're really due for some rest and possibly a little bit of pullback here. And some profit taking, quite honestly, would be very healthy. It's a natural part of the progression. And you know, this move right here is not real different than this move that we saw back from the April low into the May high. So you know, it's kind of similar duration, similar size. So now at this point, what do we take a look at? Well, first of all, it's going to be the high from last week, 36.24. We need to keep a close eye on that. We now have a small unfilled gap to the upside here. From Thursday's close to Friday's open, that goes up to 36.11. And then on the downside, we've got this unfilled gap right here from 2 weeks ago that begins on the upper end at 35.52. It comes all the way down to 35.20. So if we do see some backing and filling, this gap right here is the one to be keeping a very close eye on. Again, I would expect to see the next dip get defended to a degree because the bears really have nothing to hang their hats on. They're coming right off the highs. You don't typically see a market just crash off the highs. So bears have no confidence. Bulls have all sorts of confidence. They've been paid to not only chase strength but also to buy dips. So they're being rewarded at every turn. And so it's unlikely that the bulls are just going to walk away from this market. But we'll continue to see how earnings reports impact the price action. It seems as though we've become a little bit short-term stretch here, and a rest may be in order. Let's move on. S&P 500 was able to push slightly through this May high of 1687. Last week we got to 1693 on Thursday and closed at 1692 and change on Friday. So again, this index has come a significant distance off this late June low. That represents an 8.5% run. So that's very significant for this index as well. And you can also see from this April to May high, it's very similar. So you know, the market tends to move with a little bit of a rhythm. So we'll see if this kind of marks a potential spot for some profit taking to kick in. What we need to take note of here is that there is a very small gap down to 1652. And so we'll see if we do happen to see any selling pressure and profit taking. This zone right here may get tested on a pullback. We'll have to see how that takes place. But you can definitely see over the past several days that the pace has certainly slowed here for the S&P as well, even though it is making new highs. Let's move on. The Russell 2000, this has made a tremendous move. In fact, this low from April was at 898. We saw a run to 1008. So that is exactly a 110-point move. Well, from right here, we saw the Nasdaq pull. The Russell pull back to 942, And then this week we saw a move to 1052, which is exactly a 110-point move. So take very close notice of this. Not only is this not a sustainable pace, I mean, this represents an 11.7% run. So that's a tremendous move over the course of just a few weeks' time. So this is a stretched index. The air is getting a little bit thin here. I'm not the type to aggressively try and short this move because, again, it's been very strong. It just really is more indicative of kind of a market that may have a memory with this move right here compared to the prior big rally. And therefore, maybe we enter into a phase like this where we start to churn for a little while. That certainly would be beneficial for this index. We'll see. If we do happen to pull back, this 1020 area is the spot of an unfilled gap right now to the downside. So keep a close eye on that. The Dow acting really well here. In fact, it's challenging the upper end of its range. It was able to push through that prior high, which was the 15542 level set right here on May 22nd. On Thursday this week, it did clear that level, got all the way up to 15589. But you can see that it has rallied here, and then it's actually put in a little bit of rest. So this index is actually in a little bit better shape than the others. It's not nearly as extended, but it is likely to take its cues from the others. It's sitting right here at just a few points off of its all-time high, so it's still in very good shape here, but I really think that it's going to be influenced largely by the other indices, given that this is only 30 stocks. That's why it's the Dow 30. And then one quick look here at the volatility index. This really just shows a rapid retreat off this 22 area that we got to just a few weeks ago when the market kind of turned off the June 24th low. The VIX turned off of its June 24th peak. And we've seen a rapid retreat since then, brought this thing all the way back down into this 12-13 range. It's been kind of the low end of the range here for this calendar year, and that just again shows a very high level of complacency in the market. So there's definitely room for some profit taking in the market. There's room for a little bit more fear here. It's just a matter of, do we see it, or do we see the market laterally stabilize instead? So it's going to be an interesting few days ahead, but we've got some key levels to keep a close eye on. If you're looking for some trade ideas to add to your own, we'd love to show you what we're all about at thestockbandit.com. Stop by. We offer a free trial to first-time users. And other than that, thanks for joining me for this video. I will have more for you soon, but until then, trade like a bandit.